Good morning, everyone. So we tried a new method this morning to get everyone out of bed for day 2, and the fire alarm worked perfect. So thank you all for being here. So we're excited about our first in-person panel here. Stacey Cunningham is the president of the NYSE Group, which includes the New York Stock Exchange and a diverse range of equity and equity option exchanges, all wholly owned subsidiaries of the Intercontinental Exchange. She is the 67th president and the first woman to lead the NYSE Group in its 226-year history. Ms. Cunningham is a respected equities industry veteran, having held senior positions in global exchanges throughout her career. Most recently, she was the NYSE Chief Operating Officer, where she was responsible for NYSE's 4 equity markets and 2 option markets. Before joining NYSE, Ms. Cunningham held several senior positions at NASDAQ. Ms. Cunningham began her career on the NYSE trading floor, where she served as a specialist. Matt Billings, Senior Vice President for Trading Services at 2 Sigma Securities. Matt Billings began his career on the exchange floors in Chicago more than 30 years ago. This introduction is extra special for me. It was on those floors that Matt and his family gave me my start in the business on the Chicago Stock Exchange in the early 90s. So thank you, Matt.
Thank you.
Today, Mr. Billing works in 2 Sigma Securities wholesale market making team. In this role, his areas of oversight include trade, service desks, as well as client relationships. He also focuses on market structure and in particular market data. Prior to coming to 2 Sigma Securities, Mr. Billings held senior positions at TD Ameritrade and Scottrade. Thank you.
Thank you. Somewhere in the middle there, I became Mr. Billings, which was kind of weird, by the way. Thank you. Drew, thank you for that. And I know Jim's not here, but we congratulate Jim and the entire STA team and the STA Board of Governors and Drew and Kate for pulling this off. This is a great conference, and we just appreciate the ability to let us have the great return. So this is very, very special. And Stacy, this is pretty special for me too. I mean, we've crossed paths many times over the course of years, and I can honestly say I could just, applaud you because you've always been incredibly knowledgeable and a great advocacy for this industry. So it's a treat for me to sit down with you, and I congratulate you on the great success you're having at the New York Stock Exchange.
Well, thanks, Matt. I feel like we should wrap it up right there.
Yeah, we're done. That's good. Unfortunately, no. So let's jump into capital formation. Obviously, New York Stock Exchange is a fulcrum in the world of capital formation, and with how much we've seen the power of this in the last 12 to 18 months in the face of this horrible pandemic that we're getting through. But it's just incredible what we've seen, whether it be more traditional IPOs, direct listing where it makes sense. I think you had a Warby Parker last week for a direct listing. And SPACs came in with a huge wave at the end of 2020 into 2021. And so I'm going to use that metaphor as a wave. You can complete that if you want to complete that, but it seems it's still there. So I'd like to get your comments just on capital formation and just what we're seeing, in the last 12 to 18 months. And then if you want to pick apart, a little bit about, traditional IPOs versus SPACs versus direct listings and how, you guys handle them on the floor of the NYSE.
Sure. And first, I do want to say thank you for having me here. As someone pointed out outside as I was talking to one of my colleagues, Grace, that this is the first time I'm actually speaking in front of a full room. And I lose sense, I don't know how others are, but what's virtual and what's live these days. So we've been hosting a lot of companies for IPOs, as Matt mentions. And so we'll have 200 people, and I'm speaking in front of them. But this is the first event that has been off-site travel to. So well done to STA. It's exciting to see people gathering together and to see so many friends out in the audience. So nobody would have expected that the capital markets would be going gangbusters in the wake of the pandemic. It has been so incredibly busy. It really started pretty quickly after March of 2020 when the IPO market slammed shut, started to creep up. And first it was healthcare companies, biotechs that were going public. There were some SPACs that were going public. They were very well received, and all of a sudden, companies that had been on the sidelines for so long decided that they wanted to tap the public markets. I think this is an important trend and shift from where we've been, because for so long, companies have been staying private as long as possible, and I personally believe it has a lot of negative effects. One, it leads to companies in the private markets not having the same discipline and governance that they get when they're a public company and their investors have access to information that is required as a public company that's not required as a private company. And so you see a lot of companies growing very large in the private markets without that discipline. Two, you also see bad habits growing with them, right? I mean, if there are small companies, you just don't see that quite the same way. The valuations in the private markets are not based on a number of buyers and sellers coming together with full information to make decisions the way it is in the public markets. So you very often see companies growing privately, and then they go public, and they get repriced to a way that's not necessarily a good thing for investors. My personal view is it also contributes to the bifurcation of wealth when companies are growing really quickly, rapidly, and not everyone has access to that opportunity. And access to opportunity is core to what we believe at the NYSE is so critical to capitalism working, right? It has to be a story of shared success, and people have to have access to opportunities, which is why you're seeing things like the meme stock craze and all of those new investors in the market who want to, they're trying to make a statement that they want access to the same opportunities others have. And so I don't think we should ignore any of that. So that said, it's a good thing companies are going public a little bit earlier in their life cycle, and they have choices. As you mentioned, they're looking at traditional IPOs work, direct listings work. I mean, we innovated on the direct listing side. It's been literally 5 years since we first started working on that project. And the first company was Spotify when they went in 2018, and it's becoming mainstream now. I mean, I talk to companies that are going public, and they say, I don't know, should we do an IPO? Should we do a direct listing? And we sit down and we talk about their goals, and we talk about what they're considering and what's most important to them. And it's become a very mainstream thing. And so we continue to look for ways to change the way, the options and the opportunities that are out there for both companies and their investors. And it delivers opportunity to democratizing access to day one in the public markets. There isn't an allocation the night before to a subset of investors. So with a direct listing, everybody's on a level playing field. Democratizes access to information. In addition to a roadshow, companies that do a direct listing very often do a televised investor day that can be several hours long with a lot of information. They can't do that in an IPO process, so all investors get that information. And it also reduces their cost of capital. It's not about fees to the investment banks. I think that's something that's misunderstood a lot with the direct listing. They still are paying banks to help them with that process and help them become a public company, go through the S1 process and all of that. But they're not selling at a discount to a subset of investors and watching their stock appreciate the next day. And I'm going to use this line all the time, but it looks great when an IPO pops 100%. It's all over CNBC. It's all over the Journal. If you're the one that sold it the night before, it doesn't feel that good to see it pop like that when you feel like that just wasn't the right price. And so our goal is to find the right price, and that's what we do with direct listing.
Cool. I want to shift towards market structure. So certainly we had, Chairman Gensler is well established now at this point in time, has a circuit of speeches and testimonies. Yeah. And I think when he was, kind of onboarding, you kind of felt there was like a different agenda coming about, more climate change and ESG type of feel. And then we had the meme stock events of January. So it's obviously taken a hard left into the nuances of market structure and the market and how they operate. So there's a lot going on there, and just as we saw in the previous panel, where you throw out multiple subjects that can be tackled and are brought up on these various forums, what is it that's catching the most attention within the walls of the New York Stock Exchange?
Well, I think it's not so much a hard left as much as more things on his plate. So he's definitely continues to be focused on ESG and disclosures, and that will come. But obviously, as he was stepping into the role, there was a lot happening in the markets. And market structure is something Chair Gensler is really interested in. It's a passion area for him. So he's not afraid to shy away from what are viewed as sacred parts of the market, and he's willing to go in. And his goal is to find more transparency and to make sure the markets are operating fair with as little friction as possible. He's going to pursue that. I don't see this step, this going away on that front. I think that transparency is really important because as we've talked about new entrants into the market, the worst thing that you can do to build confidence is not have all the facts out there. So whether or not things are good or bad for investors, when investors don't know how the system works, they feel like it doesn't work for them. So it's really important that we continue to promote transparency. And Chair Gensler's definitely focused on that aspect, and I think that'll be good because we would all benefit from continuing to maintain the level of retail participation that we have in the market. We want to educate them and make sure that we continue to make them even more informed investors, and even, and when I say that, I mean about the way the markets work, about individual securities, and financial education never ends. We all need to continue to work on that. So I think that we will see some of those results. We obviously, in the walls of the NYSE, are very focused on things that deliver more transparency. At an exchange, we're artificially constrained from competing for pretty much half of the market. It's like, we're in a bullfight, and sure, you can beat the price on an exchange if you've drugged the bull and starved him for 2 weeks. So our goal is let's make it a level playing field, and then we'll all compete for the best price out there.
Okay, fair enough. Are you getting early word on when we should be getting a report out from the commission?
Imminent.
We expected it last week, and now
Yes.
we're thinking eminently after the testimony. Is there, and I suspect this is one of many reports, because every time you see a testimony, it's like he's asked the commission to research this.
Yes.
I mean, something should be eminent.
Yeah,
Give us a more definitive agenda of what we're looking at here.
I do think it probably is imminent, and like you, we've all been expecting it
Yeah.
pretty quickly. In our conversations with the SEC and with Chair Gensler, he has been very clear that he does want to study things. So it was never, hey, I'm coming in with these preconceived notions. He may have had preconceived ideas of areas that he wanted to explore, but he certainly was filling the SEC with a number of academics and data scientists that will look at this information and come up with thoughtful proposals. Whether or not we all agree on whether or not it's the right path forward, there's a process for all of that as well, which we'll begin and run through that. And I expect payment for order flow and rebates, as I know have been talked about a lot here already, will be part of that discussion.
Yeah, be part of the process. Reflecting back to the previous, SEC administration under Chairman Clayton, and they did a lot of work in the market data arena with, it's actually done. I mean, they've passed a rule on governance and one on infrastructure, and I know there's, and they're actually the clock has started to tick on these. They've, officially in motion here. And I know there's like a little bit of overhang on the litigation front, but is there anything that, strikes that you can comment on in that area?
Yeah, I mean, we are challenging a number of the actions that the SEC had taken in the prior administration, largely because we believe they are outside of the reach of the mandate of the SEC. And so far, the courts that have made those decisions have decided that they were in prior ones, like the transaction fee pilot and others. So it's the same story with market data. I mean, market data is a very emotional topic for people, and I understand that. But I think we should take a step back and think about the world and how the world is changing. 20 years ago, I used to pay something like $75 for my cable TV, and I would get all the channels that I needed. Now, I get cable, I get HBO Max, I get Apple TV, I get Hulu, I get Peacock, I get Disney Plus. I mean, I'm paying all of these different providers because when you fragment content, it costs something to stitch it back together. So our markets have become very fragmented, and people are frustrated that they're paying to stitch the market back together. You don't have to see it all, but if you want to see it all, it's gonna change the landscape. So it's frustrating to see how much is being spent on market data versus other aspects. It's really important to recognize that the all-in cost to trade is very low, sub 5 mils on NYSE. Across, and that includes transaction fees, market data, co-location, all of the costs that it comes with it. It's just different. The fixed costs have gone up, and the variable costs have gone down, and so that becomes, we've had this debate in this room lots of times, but we'll see how it shakes out. It's in progress.
Yeah, I had the privilege of serving on the SIP advisory committee for a couple of years, and I make that sound like a prison term. It was actually a lot of fun.
You are the first person I've heard say that committee is a lot.
No, it was, it's actually when you're in the walls of the room, people are actually
Yeah.
trying to get things done. Obviously, there's hard to drive consensus.
Yes.
But part of the governance proposal is trying to make that more interesting, but.
Yeah, I'm glad you bring that up, Matt, because like I said, I mean, I think there's a lot of reasons why people are frustrated with market data. That said, we are open to changing the way this works. We're open to adding more data onto the SIP, and we have been advocating for that for quite some time in the SIP committee and looking to give additional data so that if there is content that you feel like is a must-see content, we can get that into the standard that the industry has access to without having to buy a number of different products, as well as improving the performance of the SIP, which we've invested a lot in doing over the past several years.
Gotcha. I want to shift to ESG. So this is a topic where like we get our newsletters in the morning and you got 3 articles on it that I think I know what ESG is, but I don't know exactly what it is, and I should know, but all of our companies are talking about it. There's hard to get any sort of standardization. There's starting to get some ESG analytics out there, and yet there's a lot of money heading towards this.
Yes.
And I'm not being naive. I know what ESG is and all that, but it's just it needs so much more defining and so much more specificity of it's like a USDA brand. It has to mean something if you're going to be doing this. So I'd like to get your feel on where this is all heading, and I know you've done some work I saw Intrinsic Exchange Group where you're working with them on an initiative as well on that front. Yeah,
what I think is great about ESG is we are talking about things that were already happening. Yeah. Some of them were happening, some of them weren't, but we're talking about it more thoughtfully, putting a construct about it so people understand it and can drive the change that they want to see. Companies are very focused on ESG. For several decades, they've been investing in their stakeholders, their communities, and others. Now it's become important for them to disclose what they're doing so that investors can make the decisions they want to make about rewarding the behavior they want to see and leading to more successful outcomes, both financially and in society. It's really critical that we do this. I mean, we've seen that the private sector has the ability to move really quickly. You think about the companies that have helped us get through this pandemic more quickly. It's Pfizer and Johnson & Johnson, Moderna, and all those who came up with solutions really quickly. When we wait for policymakers to drive change, it takes longer, which is why the SEC uses SRO plans, frankly, to get stuff done, is let the exchanges go do this more quickly than they might. Within ESG, we view it on what are we doing internally within ICE and NYSE, what are we doing with our community, and how can we deliver solutions for the companies and members of our community that want to make more of a difference. So we've been tackling that on a number of fronts. One of the things we do is provide data. So giving 500 different ESG criteria to both investors, index traders, and companies so they can see what are people seeing about our work, what do we need to update, because data can drive the outcomes that we want to see. But also bringing the community together for solutions. So when we launched the Board Advisory Council a couple of years ago, that was a solution for promoting diversity in our listed company community and on their corporate boards. That's been successful in getting a database of diverse candidates that are coming from the CEOs that are listed on the NYSE, who they're saying, hey, I'd vouch for this person if you're looking for a new board member. We recently announced, as you mentioned, a partnership with Intrinsic Exchange Group, where we took a minority stake in them, because they've come up with a way to account and financially value natural assets. So when you think about rainforests and all the assets of the world that we want to preserve, they've come up with a way to how do you value those so that investors can actually invest in a natural asset company that's going to promote and grow those natural assets. And it gives us a way to actually invest in those assets. So we filed, or we plan to file, we announced our plans to introduce listing natural asset companies. So it gives us an opportunity to partner with countries like Costa Rica and others, companies like Danone and others who are very focused on the sustainability of those assets, and gives investors an opportunity to invest in that future. And so we're excited, but again, it's a strategy where we say, how do we deliver solutions instead of just saying you have to meet some standard.
Great. You touched upon it from the governance side of it, your board advisory council, from the macro level of, you just have a unique position with all your issuer community to, kind of provide, is that the goal of that, just to kind of help prod that along?
Yeah, so when we look at, NYSE listed companies are very focused on ESG. looking at the Russell 1000 companies that are listed on the NYSE, 99% of them have a woman on their board, 91% have 2 or more, I think 83% have 20% women on their board. So we are focused on this. But when they're looking to add additional board members, and most board seats are filled through referrals, not through recruiters. So by tapping into our community, I mean, we represent 84% of the people that are publicly, that are employed by public companies or are part of NYSE listed companies. So you just think about the breadth of that community. Those CEOs know a lot of people and they have great networks. So we're looking for ways to say, not only can you get the names of people who might be candidates you could be interested in based on their experience and background, but you also get the name of the CEO who recommended them. So you can pick up the phone and say, hey, Ken Frazier, I see you nominated this person into this database. Can you tell me more about them so they can figure out if it's a fit? Those are solutions-based approaches. And we've taken the stance to not use our listing standards to require it. Frankly, investors are forcing the issue. And that's the way we believe markets should work, is that investors should drive those issues. We don't want to see people add requirements that are just because they're checking a box and not that they're really setting up for success, but we help them drive those changes by giving them solutions. So we're coming up on, I don't know, it was 2 or 3 years ago that we launched that. There are 15 candidates that have been placed on corporate boards that were members of the NYSE database. And so we're seeing these are quality candidates that are vetted by our community. And that's one of the things we focus and spend a lot of energy on, is how do we bring together these companies to drive the change that we need to see across the world.
Can I bring that down to more of a personal level then?
Yeah.
Because I mean, talk about DEI and your ability to push that at that level. I mean, what is it, you have such a unique position, you get to be like a clearinghouse of lots of good ideas and lots of good initiatives. What is it that you see us in our industry, how are we doing? What can we do better? What are some best practices that you've seen out there that you're not seeing enough of us thinking about?
Yeah, I think one of the things we need to recognize is, and this really comes down to inclusion is not, people aren't created equally. So even if you're thinking about, 2 women are not the same. We all have our own unique backgrounds that make us individuals. You are a universe of one. And people don't communicate the same way. So when we use the same methods to promote people, to navigate through an organization, that's going to work for a subset of people and not necessarily work for everyone else. We've all been living through it in this virtual world. When you have team members who you are quieter in meetings, it's really hard to get them to engage. And so you have to proactively think about that. It's widely known that women very often turn down opportunities where men are more likely to accept an opportunity even if they don't necessarily feel that they have 100% of the skills for the role at that time. But if you ask them multiple times, they say, yes, that's my personal experience. And when you say personal, I've turned down every job I've ever been offered multiple times. But I was lucky enough that the people who were offering me the roles continued to offer them and came back and said, wait a minute, think about it. Why are you saying no? Like, let's solve that problem. That's not the case, but I'm in this role that I'm in today because of the fact that people communicated with me in a different way over time. So for the industry, that would be my advice, is don't just ask once. Think about why people are saying yes or no. Think about what the barriers are to promoting people. If it's work-life balance, let's solve those problems. Like, there are lots of things that we can do when we put our heads together. We're a bunch of smart people.
There was a nice panel yesterday. Heather Brilliant from the Women in Finance did a really nice job.
Yeah, Heather's great.
Spoke to, it was very good about, raise your hand and make sure your voice is heard. So that was well. Yeah,
that's an important point too. So I'm talking about on one side is, I think, as the person who is in a position of, has the ability to promote someone, they need to behave differently. As the individual, you also need to behave differently. You need to be able to be open to the roles and accept the jobs and challenge yourself that you're going to learn what you need to know, and just put a plan in place. Well, what don't I know about this, and who can help me with that? Ask for help. Ask for advice. There is no weakness in asking for help. I have reached out to CEOs of the largest companies in the world and said, hey, I'm new in this part of can I, there's some aspect of my job that's entirely new to me. Can you give me some advice on it? Because I don't know what, how to handle it, or I'm trying to think it through. And they have said yes every single time. I mean, literally, you think about the largest companies in the world, and I pick up the phone or send them an email and say, can I ask your advice on something? And they always say yes, how's Friday at 3 p.m., come by. So don't be afraid to ask for help.
Great. You mentioned earlier about the technology work you've been doing at the NYSE. I know I'm looking forward to not getting any pillar email notifications at some point in time, since it's been on for multiple years. How is that progressing, and when do you see that to be, that gigantic initiative coming to a close?
So on the equity side, it's complete. On the option side, we were planning on launching in November, and the SEC just encouraged us to push that to January by telling us our rules won't be approved in time. But it's been fantastic. And when we think back, and you should all give yourselves a round of applause for how this industry got through March 2020 in the midst of so much volatility, and not just in the industry, but also personally. You were dealing with family issues, dealing with everything, and those markets functioned exactly the way they should be. One of the things I am most proud of was filing a rule change at the NYSE that mandated industry members needed to show up for market-wide circuit breaker testing, because we would hold quarterly testing and nobody would show up. And I remember saying to the team one day, this is gonna be a real problem if we ever need it and people aren't ready for it. So we filed a rule and said, hey, you gotta come to at least once a year, you gotta show up for market-wide circuit breaker testing. And it went really, really well. So thank you. But I think putting that focus on projects that are so uninteresting, because they're not necessarily the things that are gonna make us money every day. When you think about resilience and BCP, we used every single thing that spring, and Pillar performed splendidly. I mean, the whole idea behind the technology is that it scales and it operates consistently under various market conditions. And so when you think about our peak message traffic day prior to March of 2020 was 110 billion messages in a day. And then all of a sudden in March 2020, it was 330, and our systems just hummed along exactly the same way that they did prior to that. That's important because trading and making markets and setting prices is a really sophisticated risk management exercise. And you price in that risk. So when systems slow down, or somebody's not answering the phone, or you're not getting a response on your orders, you're going to assume that you have a greater risk by having prices out in the market, and you're gonna make worse prices, and investors get worse prices. So having that performance is really, really important. It took us longer to roll it out than we would have wanted, but that's the way some of these projects go. Really happy with what we saw.
So I echo your acknowledgement of, our memories are so short, like we can't remember March of 2020 and just the upheaval we went through, and how we're all trying to manage from home while we're going, we have market-wide circuit breakers are triggering, and somehow we made it through. So it is a compliment to, the whole gang. It's
everybody.
Amazing. I want to kind of shift gears. I don't know if anyone's brought this one up, but it has to go with cybersecurity. You're in a pretty unique position, and it's something that all of our firms are dealing with, and we're embedded in this discussion. What are the things that give you the most pause? I mean, we know we read about it and hear about these ransomware attacks, and there's just bad actors out there who are constantly trying to penetrate the walls of our various firms. How do you manage that?
Yeah, it's one of the most critical issues that faces all of us right now, not just certainly as an exchange and as the New York Stock Exchange, we are a favorite for some, so we invest heavily in it. We work closely with other exchanges, with government agencies and others to share information. But the fact is that space evolves so quickly. So there are, bad actors learn very quickly, and they're out there nonstop. So there's no rest for the weary on that front. There are a lot of really sophisticated technology providers that help keep up with that process. It's an area of focus, again, on Chair Gensler's agenda and what are companies doing, because at some point, I think it's an interesting line. If you're not spending any time or energy thinking about cybersecurity, that's definitely on you. If you're spending a ton of time and energy and doing everything you possibly can, but a foreign entity, a government entity perhaps, is attacking you and they get through, is that on you? Probably not, right? So where's that line shift? And I think that's a hard line to draw, because at some point you should have some liability, but I don't think we can expect when the resources of an entire nation are attacking an individual area, it's, you know, that's all their responsibility. The impact can be pretty dramatic. I mean, we saw our food chain be impacted. We saw our pipelines be impacted. This is it's a scary area. I mean, it's definitely something that should be keeping us up all at night, or making sure that we're doing what we can. And one thing that we can all do, whether or not you're in your specific role focused on this, is be careful about our own actions. So, I mean, the amount of phishing tests that we do internally to make sure that people aren't clicking on emails or clicking on attachments, just like little things, can have pretty disastrous consequences.
Yeah, in my previous life, we would do like these faux phishing, you know, tests within our firms, and it'd be amazing at the executive level how many folks fell for that one.
Yeah.
I mean, you spell, you know, Roger with, misspell it, and people are like, click, and you're like, did you just really do that?
Yeah.
You
Yeah,
know?
but they've gotten really sophisticated. I mean, the spear phishing ones, they look at your LinkedIn profiles, they looked at all these things, and they come up with, they say, hey, I went to the same school you went to, I'm applying for a job, here's my resume, can you open it? Like, I don't even open an attachment from somebody who seemingly, I'm like, can you send that to me in a text, you know, in the email, or you have to find a way to confirm, because there are things you would definitely fall for. And at the executive level, they're getting a lot of, you know, interesting emails. The other element to it is digital currencies, right? I mean, the fact that cryptocurrency makes it much easier to ask for massive ransoms is something.
Is limited, yeah.
Yeah, I mean, you don't have to go out with a suitcase full of hundreds.
Cool. So I know, as you know, Drew in his kind introduction mentioned, you know, your earlier start on the floors of the NYSE, and I commend you for that.
And yours on
Chicago Stock Exchange. So yeah, as we wind down here, I always like to thank the New York Stock Exchange for rescuing the Chicago Stock Exchange, and because I was long gone from that entity by that time, but it was good that you purchased them. We appreciate it. I know that you have a closet full of memorabilia from the Chicago Stock Exchange. There's a ton of Billings Company stuff in there. So if you ever have a moment, I'd love to get into that closet and rifle through it and get out whatever I can.
I got a guy.
Yeah, I got a guy.
Yeah.
I'll talk to that guy.
Yeah.
Stacy, thank you very much for your time. I appreciate it this morning.
Matt.
Thank you, everyone
Thanks.
here. Appreciate it.